All right, let's get started here. Okay, so in today's class, we're going to be going through Fibonacci, our Fibonacci retracement tool, and how we use it, how we place it, and the purpose behind it. So our previous class, we had gone through price action and market structure, and marking off our switching market structure, our breaking market structure, which are going to be important visual tools that we're going to need in order to mark off our fibs. But before we get started on the fibs, I kind of wanted to let me do this really quick here. Hold on, guys. Fibs, Fibonacci. Retracement. Okay, because I know that there are might be some people that see this video later and might not understand what a Fibonacci retracement is. So we're gonna kind of go through it. So here, so I'm gonna read off a little bit of this. I was kind of going through a little bit of it. So the Fibonacci is a retracement tool that we use, right? That was named after an Italian economist. What it does is it creates a series of lines which we can plot, and there are 2 points to it, a high and a low, and in this case, a high point and low point. The percentage levels provide our areas where price could stall or reverse. The most commonly used ratios are 23, 38, 50, 61, and 78. These levels, now this is important, I read this earlier, these levels should not be relied on exclusively, so it's dangerous to assume the price will reverse after hitting a specific Fibonacci level. And this is where we use Fibonacci as a means of setup, all right? And I don't use it the way most traders will use it. And I'll show you how I use it based on reading what's called institutional discount level, okay? So, and also we use different ratios than what they've got posted here, much different, because, and I'll walk you through it. But for the most part, the fib retracement level is an indicator which plots 2 points, and within those 2 points, we can plot specific levels. These levels right here, these 23, 38, 50, 60, and 78 were actually levels which are prime numbers. And I don't really know the whole, I'm sure some of you guys might be able to give the more exact definition on it, but these are prime levels, which are universal levels that actually speak the numbers of math for everything in the universe. So apparently this has a significance, and I don't really want to get too deep into it. You could do more research on your own, but for the most part, I just wanted to point out what the purpose of Fibonacci tool is, and where the origin of the name came from, and also what is used in Fibonacci based on what most technical traders will use. However, I use it very, very differently, and I'll walk you through it shortly. Okay. So for the most part, the fib levels here, let me see, on TradingView, fib levels are right here. See this right here? If you click this tab here, you will be able to see a whole bunch of different tools here. These are all retracement, like different types of tools, but the tool we're looking for is this here, fib retracement. And the fib retracement, when you use it out of the box, in other words, TradingView's original tool, it actually is, let me see if I can find the default setting on this. Okay, so let me see. Oh, here. Apply defaults. Okay, see, that's the default level for fibs right there. See it? So you've got these numbers here, and these numbers are the numbers that we had seen on that Investopedia, 2338.5, 6178. And but we don't use it like this, okay? At least how I'm teaching it, I don't use it this way. All right. And then, of course, it has it up on the upside here. See these numbers, 1.68, 2.68, etc. So I'm going to go ahead and change this back to template. All right. So you know what? I don't have my original template, but it's okay because what I'm going to do is show you how to change it. What we need to do is we need to change the fib settings. So whether you have the default setting or this setting here, or whatever setting you have, to set it to the default to the settings in which I utilize, it's you go here. What you do is you right click and you go to settings. Left click on settings, and from settings we are going to change these. So we have 0, and I'm going to change this to 0.00. Okay, and then this here I'm going to change to 0.25. This setting right here I'm going to change to 25. This one 0.50. This one 50, and then this is 0.75. I need to change this. 0.75, and then of course 1.00, and this one right here is 1.0.
Julius, the 25 there, should that be a 0.25 on the left second?
Yes, it should be. Yep, there we go. Oh, it's not changing. It's probably 0.25. There it is. There. Yep, that is correct. Okay, so this is what this fib setting should be, 0.00. Let me see, 0.00. Maybe that'll hold. Whoop. 0.75. I think that's. Okay, so these are the settings that we should have. Okay, and I like to do it in yellow. And also another thing is I like to get the labels on the right side. All right. And percents. Okay. So you see that right there, 0. That upper number is not showing up. This here. So that's 0.
Probably should be 1.0 instead of 100.
Yeah, let me try that. Yep, that's it, 1.0. Okay, that is correct. Okay, so here are the settings we have, 0.25, 50, 75, and 100. I don't really know why it's floating just above the lines, but it's okay. Let me try to adjust that. Levels, percent. Oh, middle, top, there it is. Okay, boom. All right, so that's our fib settings. We've got that established, and you know what? I don't want this to go all the way to the right side. Logs, percent, background. Oh, extend light. Okay, there it is. That's what I wanted. So I removed the extension. You see that? Because we don't need that extension because we're only using it as a marker. Okay. So now that we've got our fib settings, that's how you adjust settings on TradingView in order to get this thing to view with how I have been teaching this for institutional discount level. So what we're going to do right now is we need to mark up this chart. Right now we have the daily chart, and I need to mark this up. Okay, so what I mean by markup is market structure. So we have our high. Okay, our low. Our high. Our high. Our high. Our low. Our low. We have lower low here, right? This here is a lower high. Again, we're looking at the, we are looking at the daily chart. high. Okay. And then here. Lower low. This, and then this became a higher low. And this is lower low here. Okay, so I'm going to leave that for now. All right. So all right. So what's the purpose behind the fibs? The purpose behind the Fibonacci tool is it's going to tell us how far back a pullback is going to occur. Okay. In other words, we have price moving in this pattern. Let me change this color first. All right. So we have price coming, moving in this direction, right? And as price starts to move in its pattern, we see a break in market structure right here. And then price pull back. See this pullback right here? That's what we want to measure, the depth of this pullback. Because based on the depth of this pullback, we'll be able to determine institutional discount range. So hold on a moment. So we have, when we're looking at the fibs here, we've got an area of premium up here. And down here below. Now this is when we are looking at a bullish trend. This guy. Okay. So we've got our fibs, and we have a 50 line. I always ask, where's the 50 line? Because price will always seek for discount because institutions are just like you and I. We want to get pricing at a discount. And as price was continuing to move to the upside here, and change direction. There's our SMS, right? And here's our BMS, break in market structure, right there. When price gave us this SMS, also gave us this BMS here. When price gave us this BMS, this gave us a confirmation of change of direction. Now that we have a change in direction, whales and institutions, otherwise known as smart money, big money, they will seek to pull back price, counter trend, which is these red candles here and this motion downward. They will counter trend. They will push price to the downside to get better pricing because they want discount pricing just like we do. But because whales and institutions have the money, 50 million, 100 million plus dollars to put into the market, they can influence the market. They can move it in a particular direction. And our job is to basically ride the coattail of the institutions in whales once the behavior has been identified. In this case, the behavior was pushing to the downside so that the whales institution can get better pricing. And we use our FIB tool in order to determine how deep they're going to go. Because for the most part, whales and institutions want to get pricing at 50% or better, which is what is called the discount range. Does that make sense? Okay, so taking a look at this example right here, again, we have an SMS, right? Price BMS. Now that price BMS, it pulled back. How I like to drop my fib levels is I like to go to the 4-hour chart. So in this case, we're in the daily. I'm going to drop it to the 4-hour. It'll give us a clearer picture of to see where the fib placement is going to be. What's going to happen is as soon as price starts to pull back in this situation, okay, we are going to right here at this point, as soon as price started pulling back, let me make this larger. Okay, so price came BMS. When price started pulling back, we would start looking for a place to drop our Fibonacci. But we're going to start it right here first. Okay, let me use this replay tool. Okay, and we're going to track it, and you'll be able to see how all this unfolds. Okay, so we've got switch in market structure and price moving to the upside. We're going to wait for the BMS. Let me make sure the speed's good. All right, here we go. So watch, price is going to unfold. Boom. So as soon as price came, broke to the upside, and if you notice, it's starting to pull back, right? As price started to pull back, we can find an area to drop our Fibonacci. In this case, this is where I would have put my fib level right here at the because this is an order block, or this right here, this block of orders right there. This is a pullback that created this push to the upside, this impulse. See these green candles? So this order block created this impulse, this push to BMS. This is where I would have put the bottom of my fib right here. We could also put it here as well as here. But for now, for our initial push, I will put it here. And I'll show you when I get a chance to drop my fib to lower levels. But for now, I want you to see, as soon as we see a break in market structure and start to see a pullback, in this case, we start seeing price pull back, then we need to drop our fib. So in this case, I would have dropped the fib from here to here. Okay. And I want price now to enter into the discount range for me to find an entry, because right now the order flow is to the upside. In other words, we had a switch in market structure, a break in market structure, and now price broke through and it's pulling back. This pullback is where we are going to be finding our entry. And we're finding our entry based on the pullback because this pullback is being created because institutions in Wales want to get discount pricing. So we use our fib tool to figure out how deep will they go on the pullback. And this is the highest probability entry that we could take when it goes 50 or better. So in this situation, I'm going to mark off our 50 line, which is this. Okay. And I'm going to remove this because that's what I like to do. I want to keep it clean. So I'm going to remove that. Okay. So let's move forward and see if it hits the 50 line. Boom, it hit the 50 line. Now that it hit the 50 line and we're on a 4-hour chart, what I would normally do, and I'm not going to get too deep into finding an entry, but I just wanted to show you how the fib tool is used and why. We use the fib tool to determine how deep a pullback will be against the trend, so we can find an entry where whales and institutions will seek to get discount pricing, and this gives us our highest probability trade entry. So we are looking for an entry for a buy. So as long as price goes into the 50 or better, right here, anywhere in there. Okay. So let's take this 50 line here, right there. Okay. So from here, I would drop it to the 1-hour chart. And this is 1-hour chart. We are 50 or better on the institutional discount range. Let's move the chart forward and see how this unfolds. And let's see where we could find a entry based on a good candle And again, I don't want to make this a class of finding entries. Really, it's just a class on fibs. We'll look for entries later. So right here, we've got a railroad pattern right there. So we have 50 or better with a railroad pattern. We could have even waited for this here. Here's another railroad pattern on this green candle is equal to this red candle right there. Okay, so what we're going to do now is we're going to watch this chart unfold, and then we're going to see if we can find another entry, because this would be entry number 1 right here. Okay, so we have one entry there based on looking for pullbacks into institutional discount range. So let's see if we can find another one. We're still going to keep our fibs line right here still. Okay. Now I'm going to explain something. Now that we have a high right here and a low, we can even adjust our fib level to this, because based on reading market structure, right, we have higher lows right here and another higher low. If price breaks this, we may even consider a trend, a change in trend. So this would now, we could define this as the bottom of our new fib setting. So we have the top of our fib setting, which will be the height of this candle here, and the bottom of our fib setting adjusted here. Okay, for now, we're going to keep it to this until we see price starting to pull back. So for now, this is our top of our fibs. All right, and when price starts pulling back, then that's when we're going to be looking to adjust this top of the fib line here, and we may even consider adjusting this bottom. But for now, we're going to keep it here. Okay, guys. All right. So now we're still here, equal highs, right? Still on the same fib level setting. All right, now we've got a pullback, but we don't necessarily have to change our fibs. These are equal highs. We could change it to this right there, top right here. All right, but it's still equal highs. Let's move forward. Okay, see that? We broke through BMS. We BMS this line here, BMS this structure, and we could adjust the fib up here, which we'll do now. Okay, and then we have our new 50 line. See what's happening, guys? And then if we were to track higher low, see that? And in reality, this is still our major swing structure. And again, this is a 1 hour chart. If we're not really clear on it, we go to the higher time frame. All right. And I want to be clear with the major swing structure. So based on what I'm seeing here, this is the major structures right there. All right. So yeah, we'll just keep it at that. Let me erase this. Okay. we could do this. Yeah, okay. So we've got our new 50. This is the height of our fib, right? And we could even adjust this to this point here. Okay, so now we can adjust it like that. So this is our range. If price comes down into this area, 50 or better, I'm going to be looking for buys to the upside. Okay. All right. So now right there, I'm going to be looking for buys on a 1 hour chart. We're on a 4 hour chart, but I'm going to drop it to the 1 hour. Okay. And all right. So I believe we're coming up to where we ended up breaking the structure here. And then I had to find the FIB placement. Okay. See this, how price broke this right here? We would move the FIB setting to this, all right, to the major swing structure. All right. Let me drop it to the 4 hours so it moves a little quicker. Okay. So in here, if we drop it to the 1 hour, you know, you could start to see, look at this pin hammer, W pattern. This was a very clean pattern here. You've got a clean pattern this is a 1 hour chart with a stop hunt. This is a very, very clear stop hunt. Yeah. And of course, price reacted off of this W pattern here. Okay, so let's do this now. Yes, okay, so we're gonna go back to the 4 hour chart and all right. Okay, so again, the FIB tool is used to determine how far back price will pull back into, and we want price to come back into the 50 range or better when price is trending up. We want it to come back to the 50 or better. And this will give us highest probability trade to get in for institutional discount range. Okay. So in this situation here, we can identify that we had an entry right here. We also had entries right here. And then price came up in BMS. Price came in BMS this. When price came in BMS this, now I'm adjusting my FIBs. Now the question is, where's the bottom of the FIB? The bottom of the FIB will be the order block that created the BMS. So this area here is the order block that created this break in market structure. We broke this structure here. So now I would move the FIB setting, the bottom of the FIB. Let me grab it. The bottom of the FIB will be right there. Again, why did I put it here? Because the impulse move that broke this market structure is this order block. So now I'm putting that FIB there. So now when price came and broke up here, right there, price started pulling back. When it started pulling back, I now have the top of my FIB mark. And that's where I would have put it. price is going to hit the 50 or better. In this case, it gave us the, it hit the just above the 50, right? Right there. With that red wick. And price gave us another impulse to the upside. When it gave us another impulse to the upside, we now have placed where we have our new fib setting because we BMS this. So price came, broke. Actually, we're right here. Sorry. Right there. Price impulsed and broke this structure. Once price broke that structure, now I get the chance to move the bottom of my fib to here. But you know, the behavior is what's important. So really this behavior, this was the wick that actually created this bull run, this bull impulse. And then price broke market structure, started pulling back. As price started pulling back, if you notice, here's our new 50 line right there. And price came down to the 50 line, right? Could have had another entry right here, but it was short-lived. And then price came down and tested the 50 one more time. When it tested the 50 one more time, this would have been a much better entry right here, okay? Again, it came into institutional discount range. We've got higher lows being created. Right here. And price, if it breaks this, we would consider a change in trend, but it did not. It's creating higher lows, higher lows. And then again, price comes and BMS is this impulse here. Price came and BMS the structure. When price BMS the structure, we can now move our fib once again. What is the order block that created? This is the order block that created this impulse run. Okay. And we need price to come and hit the 50 or better. This was a bit challenging for many traders, I'm sure, because price started to range sideways and it came all the way down and tested the 100 line right here for equal lows, but it did not break it. Equal low here. These two lows are equal, right? And in reality, this is not a higher low, but equal low. Okay. So when price came and tested for equal lows, this would have been a great entry on a 1 hour chart or even a 5 minute, 15 minute. And then we have another BMS point right here. Price impulses to the upside. Break in market structure. This structure here was broken with this impulse. We can move our fib. It's still the same because these are equal lows, but the top of our fib we would change. Top of our fib would be right here. At this point, if we put it right here, when we had broken structure and started to range sideways, we never got down to the 50, you know, but it gave another impulse to the upside. We move the fib to this height and we'll wait for price to come back to 50 or better. Find your entry. We're still riding trend to the upside and still looking for buys based on the fact that we are in institutional discount range and have not broken particular structures like here. Okay. So that's how we use the fib tool. Now I'm going to show you something here. Let's continue because I want to show you guys this here. What happens? How do you adjust the fib when you see this drop like this? So when price continued to BMS, structure, impulses to the upside, we can adjust our fibs accordingly, correct? So in this case, this is where the fib setting is. It's from here to here, right? So since this is our fib setting, price came, pulled up, again, 50. Here's an entry. Another impulse to the upside, we BMS. So now that price had BMS this, right there, we can adjust our fibs. So our fib setting would have been adjusted here for the bottom and here for the top. Again, we would have wanted price to get 50 or better, but take a look at what happened. Price actually broke through, right? When price broke through, now I'm asking myself, okay, where is the next BMS point where they would look to protect liquidity? Where's the bottom of the fib where the whales and institutions don't want to go below, because if they go below, they are going to be hurting positions that they already have. Because if you notice, price is higher low, and then we have here, then we have here a lower low, right? So I'm on the 4-hour chart, right? And on the 4-hour chart, since we BMS'd, I need to change this. We just BMS'd this. Okay. We broke this market structure right here. With this strong impulse move to the downside. Okay, so now the question is, where do we move our fib? We could have moved the fib to this level here, right? But it's still broke because the wick. We could move our fib setting to this, which in this case, it did not break. So why would we move our fib to that setting? Because that was a zone flip here. Okay, so watch this. We have price. This is an order block, right? And this is also a trading range. In other words, you have support down here and resistance up here, right? So this order block here was previous support and resistance. It was, there was a point of BMS. Let me grab this yellow. Oh shoot. You know, I'm gonna grab a new one. It's gonna move stuff. Okay. Price BMS right there. It BMS that price came up and BMS this structure. That was a big deal because it is also the structure here at this point right here. Right there, boom. And that is our previous trading range or fib setting for this entire lower range right here, right? So that's why this, I don't know if you guys can see that. That's why this wick to the downside is the bottom of this fib setting, of the new fib setting. The reason we moved the fibs, I think I've got too much going on here. The reason why we moved the fib, the bottom of this fib, from here to here, because the question I needed to ask myself is, if we BMS, where would there be a change in trend? Because if you notice, our trend was moving up, right? It was moving up. Now the question is if we have a change in trend going to the downside, all right, what would we have to BMS in order to change trend? And that's how I define where I would drop my fib. How far down would I drop the fib? And it would be based on this candle right there. And that candle right there, because that defined this zone flip here. And this zone flip was defined this entire trading range, support, resistance. And what I mean by zone flip is what was previous resistance. This is resistance up here. This box, the top of this red box is resistance, is now support for this area here, this entire area here. That is now support. So that was how I made a determination on where to move my fib, how deep I would put it in order to determine how deep an institutional discount range would be. So the institutional discount range, right, would be 50 or better. Here's the top of our fib, price pushed down. So now that price pushed down here would be my institutional discount range under the thesis that I am still on a bullish trend going up. Then the question would be is, if we are going up, what point would we have to break in order for us to have a change in direction? Because if you remember on market structure and price action, we have a break in market structure, which would be this here. This break in market structure, this 100 line, would be a BMS to the downside, which would give us a confirmation of change in trend. So if price BMS is this structure right now, then I would start looking, I would have now a change in thesis, and everything I'd be looking for would be sell orders. Okay. So that's how I dropped my fib setting from here, right? Yep, right there. That's how I dropped my fib setting, which was originally here, because price came and gave us a strong impulse to the downside. So apparently this is basically a stop hunt. That's what this was. On a 4-hour chart, it is a price imbalance, which we'll cover on the next class, order blocks and price imbalance. And but this is secondary is a stop hunt. So this was a stop hunt for people who had orders here, coming up here. All these people had orders, placed their stop hunts in this area, and that's why price came down here and stopped. And he stopped because whales and institutions would look to protect this liquidity because they have buy orders inside here. They have buy orders, and if price drops down, the whales institutions that have buy orders in this area would actually be negative. And that's the reason why this is a strong BMS line, which would give us a confirmation of a change in trend. So when I'm defining where to put my fib setting for I would call it like the ultimate depth for a change in trend, it would be based on, in this case here, it would be based on where the liquidity that is being protected, and it's this liquidity here. And if price BMS is this, it would be a big deal because it would be confirmation change, because this order block created this bull run here. That's why. And it's very obvious. This is a very obvious order block because look at the flow. Watch price action. It went like this, like this. Look. Let's see if I can grab that one. If it's no. Okay. Yeah, it's a very obvious order block because watch. See this? And boom. See that? This pullback, because you have impulse to the upside, obvious pullback. And this was a major swing structure. And this order block here, because order blocks create impulses, pushes, breaks to the upside. In this case, the upside, because we're on a bull run. So this order block here created all of this, and price is being this liquidity is being protected, and that's why price is hovering sideways. Okay, so that's Fibonacci indicator and how I use it. I am looking for, again, when I drop the fib, I'm looking for to define premium range, discount range. Now, if we were looking for sell orders, this would be flipped. What is this would actually be up here. It'd be like this, right? So, but nonetheless, I'm looking for discount range. I need price to get into the 50 range or better in order to look for entries, because this gives us the highest probability entries, because whales and institutions will look to go into their institutional discount range, which would be the 50 or better. So that's how we use the fib setting. And any questions, guys?
Hello?
Yes.
Can you hear me?
Yep.
Okay. I had a question about what happens when we reach the 4,200 range. And
yes.
Now that I understand how to use the fib lines,
yep.
I'm starting to understand that the closer that we get to the 50%, it's like the discount is getting juicier.
Yes,
right?
It gets juicier. Yep. It does. You're absolutely right. In fact, yes. Go ahead.
Please excuse my incorrect use of vocabulary here.
That's okay.
But if the market makers understand that we're salivating as the closer it gets to the 50% line, is there things to look out for so that we don't get suckered into buying into it, or is it pretty much inevitable?
When you say inevitable, what do you mean inevitable? The reversal to the upside because we're still on a long trend, on a buy trend?
Give me a second. I just confused myself.
Yep. Or inevitable because it's almost like it's so easy to read.
Yeah, like it's too late, and they can't stop us from downtrending down because they're losing. Whoever's controlling this is losing dominance and kind of losing control of the new price range.
Oh, okay.
I'm sorry. I thought I really understood my question at first, and then I just confused myself.
That's okay. So
basically,
you have go ahead.
Basically, I'm trying to learn from this, and I've understood really crystal clear what it means to break that expected BMS at 4,200.
Correct.
And I've also learned and understood that when we readjust our fibs, the closer we get to the 50% line, the juicier the deal gets.
Correct.
And so I'm curious. I guess I'm asking to see what I should look out for, so I don't get tricked.
Oh, so you mean for an entry?
Yeah.
Okay. So when and that's going to be another class. I'll get more in depth on that on the entry. Okay. But right now, and let me kind of show you. Anytime you get in on a when price is in its 50% range, right? In this case, we've got price moving along for a bias direction to the upside. Order flow, money is flowing to the upside for longs, and every pullback into the 50 range or better is an opportunity for an entry. If you were trying to get in, find entries for your HODL account, this is the place to do it. Because now if you're looking to day trade this and find an entry on a day trade, if you want a much more precise entry, you're going to be dropping it to the 1 hour chart. Once price goes into its 50 range or better on the fib, right? And here's the right there. Okay. And so here's our 50, and you're going to be looking for chart pattern and candle patterns for reversals. So in this case here, we've got W forming for chart patterns. You know, he could come down for another leg of a W pattern and then bring it to the upside. And I want to hammer in on a point in which Oziel, you had said, the deeper it goes in 50 or better, the juicier it is. So earlier I had when in this case we are 50 or better, we're bouncing at the 75 range. This is very juicy to build a thesis for the upside. So the deeper it goes below 50, the stronger the opportunity that we should see for the bias direction, in this case to the upside. And I'm going to kind of add to, and this is specific to Bitcoin. I know we're kind of deviating a little bit off of the topic, but I'll just do this, kind of explain this anyways. Okay. So in this situation here, we have the 50 line, right? Okay. We have 50, and we also have this range here. Now, what I'm defining are levels here, okay? I'm defining a couple of how the ebb and flow of pricing based on levels being broken. So we have this level here, okay? Then we have this, actually this is, it's actually this, hold on. It's this. So we have this lower trading level, BMS, upper trading level, BMS, and then take a look at this lower trading level. We're expecting price to BMS from here. The fact that it's floating in this lower level is very good for a thesis for a strong buy or impulse to the upside. Okay. All right. All right. So, however, that being said, if price did this and then started to range like this, this is really shallow for us to break to the upside. All right. So as far as getting back to the question with Oziel, I wanted to cover that, Oziel, because I kind of showed the guys this when you had logged off, and I wanted to kind of walk you through that. So on the question, every time price breaks into the 50 range, you're going to be dropping the time frame to a lower time frame, 1 hour, 15 minute, and looking for an entry. You're going to be looking for a chart pattern and a candle pattern to match up. Does that make sense? Oziel? Okay. Anyways, yep.
Oh, yes, it does. Sorry, I was muted.
Oh, that's okay. So I'm going to show you something else here. If you wanted to, you could even change your fib setting to this. Let me erase some of this so it's cleaner. You could even change your fib setting to from bottom here to the top here. And every time price dips below this 50, that's where you're going to be looking for your entry. All right. Make sense?
Yeah.
Okay.
Yeah, it's almost like the closer it gets to the 100, it's like loads the spring or coil deeper to build momentum.
Yeah,
okay.
That's a great analogy. Yep. So again, I've just showed you guys the fib settings. there are whales and institutions at all different levels, right, guys? You've got institutions carrying $1 billion. You have whales carrying 100 million, 50 million, 20 million, maybe even a $10 million whale. So how does this all equate if you start dropping the timeframes to lower timeframes? Okay, for the fib settings. In fact, let me clean up some of this because we don't need any of this anymore. But I'm just going to show you the fractal nature of the fib settings. Okay, guys. All right. So let's look for, is the 4 hour. So we're on the 4 hour right now. Okay. Price had BMS this point right here. Okay. Let's take a look at what that looks like from a fractal perspective. So we have here, again, this is a 4 hour chart. We have the SMS. We have a BMS here. This was the main BMS. We have all this minor structure, but this was the major structure, major swing structure, major swing structure. So if I were to mark my fib, it would have looked like that, right? For sell orders. But now that we BMS, we're looking for buy orders. Okay. So when the price came up and broke this, now I'm dropping my fib. Let's drop it to the 1 hour so we can get even deeper into it. Now, what I'm basically walking you through is the fractal nature of reading Fibonacci's. Okay. So in this case, price broke that structure right there. When price broke that structure, here's our pullback. This is our very first pullback right there. So since that was our very first pullback, I am going to be going from here to mark my fib setting. Price came down and hit the 50 line or better. This is where you can find your entry. And you know what? Price, does it always go 50? No, it could literally go 30. And when it does do 30, I hold. Although some guys might want to find an entry on it, I will hold. The reason why is because I'm looking for the trades with the highest probability, right? Okay, so let's drop this to even a lower time frame and see if we could find the fractal nature of the fibs. So here is the 1 hour. Let's go to the 15 minute. Okay. Okay. All right, so let's take a look here. And on the higher time frames, we're going to be looking at the major structures, right? So as you reduce it to the lower time frame, you could actually start to see and play minor structures. See that? See this pullback right here? That pullback, that's our 50 line. Price came up, pulled back into the 50, and then took off again. You see how you could find fib settings to place as long as you have 2 data points for minor structure as you go deeper into the time frame. Now I dropped it to the 5 minute. Let's see. Yeah, the computer's very, very slow. You know what? Let's just do present time here, right here. Okay, so here's where we are, right? So let me just kind of give you perspective. All right, so this is present time on Bitcoin. So if we drop it to lower time frames, all right, because I had indicated that you could drop your fib setting from here to here, right? And you could play the 15-minute chart, right? Because it's here, see it? 50 setting, right? If you wanted to play this, you could. I don't do that, but you know, you could. What I'm really showing you is the fractal nature of the fib setting. Then now we're going to the 5-minute chart. On the 5-minute chart, same thing. We could even, you could even do this, right? Boom, and play this. Price came down, right? Broke it. So then again, we have to adjust accordingly. And this is the new setting. So since this is the depth, we would have dropped it here. And every time price came and created a pullback, this pullback here, you can wait for the price to pull back into the 50 range. Once it pulled back to the 50 range, entry right here. Price came higher, pulled back, entry right there. You see it? You guys see that? OZL, you got that? I've done a little bit of visual observation, dropping this to
I
the
did,
1 minute.
thank you.
Yeah, I did a little bit of visual observation, dropping it to the 1-minute chart, and the same thing. You can find the fractal nature, but it gets a little bit crazy with this. One of the challenges you're going to run into when trading lower time frames is the spread's so big that literally you can get killed on the spread because you need bigger movements. I mean, if the movement is only say 50 pips, but you've got a 20 pip spread, you know, that's it's not a lot of profit. Yeah, on forex pairs, this looking at the fractal nature of Fibonacci's on lower time frames, you can make it work because I've seen people who've worked it, and I've done a little bit. I think the most I ever made was like $2,000 on that once on a 1-minute chart, just scalping. But it moves very quickly. But some people get really good at this. But I just wanted to show you the fractal nature. But it's here, you know, like when price broke up here, this is your new fib setting right there. And you want price to come to the 50 or better. It hit it right here. So you could have found an entry right here because it did a little bit of accumulation, sideways range. But then when price came and went down here, you know, you would adjust you could start adjusting your fib setting accordingly, right? You want price to come down to the 50, never made to the 50. Adjust it to this, right? Now we're at the 50, but it keeps dropping. The tough part when you're on the 1 minute is differentiating between major swing structure and minor swing structure with the liquidity, with your market structure, your high and low. It can be challenging to visually see it, you know. All right, guys. Any other questions on this stuff?
So when you do it like that, you set it up, and then you have to wait for a break in market structure, not a switch, or until it gets outside of those fib lines. Because until it crosses either the 0 or the 100, you're still in that same range.
You're still within that same range. That is correct.
That's awesome.
Yeah, yeah. And you know, why is it that I can read it properly like this? It's because we are answering the question is, where's the liquidity? Which, unless someone can answer where the liquidity is and identify where the liquidity is, they don't have the answer to that question, you know? And again, we are identifying where the liquidity is. Let me just kind of show you. All right. So, all right. So what I'm going to do is I'm going to end this off, and then I'm going to walk you through what I shared with the class earlier. Okay, Oz? Do you have
Cool.
any other questions on fibs? before we conclude here?
I don't think so. I
Okay,
think that
great.
was pretty spot on.
Good, good. Okay, so what did we do? Basically, what we've done is we've covered the FIB tool, the Fibonacci tool, Fibonacci retracement tool. And I use the Fibonacci retracement tool. The purpose behind it is to identify institutional discount range when finding a entry into the market, because whales and institutions want discounts, and they will pull back to those discounts, right? When price goes into the 50 range or better, they want discounts. So they push this. You know, this probably, this was a significant order block, pullback, right? And this order block might have cost 30 million, 50 million to push to the downside. And when they pushed it to the downside, they exited that sell with profits, that sell order, re-entered the market on a buy. When they entered the market on a buy again, they dropped another 50 million, 90 million, reversed gears. Instead of going for sells, now are going for buys, creating all this push, putting them in heavy profit. They entered here at a massive discount. They created that discount by sell orders, and they will look to protect this liquidity, thus not dropping below. So we use our FIB tool to determine 50% or better on the Fibonacci to get discount range entries, and we ride it behind the coattail of institutional and whales. That's the whole purpose behind it. So we covered that, and we covered the placement of the FIB, and we also covered the placement of the FIB if the FIB fails on us. Like in this case, we have a strong impulse to the downside. Then the question was, where do we move the bottom of the FIB? The bottom of this FIB to determine a new change in trend would be, which would of course be BMS to the downside. This here would be the area, oh no, it's actually right here, of protected liquidity. So because this was such a strong impulse and a very obvious area of impulse, right? See that? It's obvious. This is obvious, right? It's obvious this is a pullback with intention. This wasn't whimsical. There was an intention behind it. And all this liquidity to push price to the upside, they're in buy orders. Whales institutions, every time price comes into this area, they are building an area to keep price from moving into this here. But the market maker will see an accumulation of sells before he starts moving to the upside, so he could trap these sell orders. So that's the reason why we use the FIBs. Yep. So in summary, we've defined the FIBs, we've defined the usage, we've also defined the FIBs as we continue to climb on a trend, where we mark our FIBs based on major swing structure and minor swing structure, and then what the worst case scenario would be if in order for us to have a change in trend, which would be, of course, this right here. All right. Okay, so I'm going to go ahead and stop recording, and then I'm going to cover one more thing with you guys, all right?